Welcome back to Financial Market Insights for Traders, the podcast that helps you navigate the fast paced world of trading with confidence. I'm your host, Sophia, and in today's episode, we're diving into digital options trading, a market that offers both exciting opportunities and risky pitfalls, especially for beginners. If you're new to digital options or you've tried trading but keep running into losses, this episode is for you. We'll break down simple, effective strategies and expose the biggest mistakes that trip up new traders. By the end of this episode, you'll have a clear understanding of how to trade digital options strategically while protecting yourself from costly beginner traps. Let's get into it. What are digital options? Before we jump into strategies, let's clarify what digital options are and how they work. Digital options are a type of financial contract where traders predict whether an asset's price will be higher or lower at a specific expiration time. It's a simple yes or no decision. If you predict correctly, you earn a fixed profit, often between 70% and 90% of your stake. If you're wrong, you lose your initial investment in that trade. It sounds straightforward, but don't let the simplicity fool you. Without a strategy, digital options can quickly become a game of luck rather than skill. And that's where most beginners get it wrong. So, let's talk about how to trade smartly and avoid falling into the common traps. Beginner-friendly strategies for digital options trading. If you're just starting out, you need a structured approach. Here are 3 simple strategies that work well for beginners. 1. Trade on higher time frames. One of the biggest mistakes beginners make is trading on ultra-short time frames, like 60-second or 5-minute options, because they seem exciting. But the problem? Short-term trades are highly unpredictable and volatile. Instead, focus on higher time frames like 15 minutes, 1 hour, daily charts. These give you a clearer trend direction and reduce market noise, increasing the probability of making correct predictions. Pro tip: if you're unsure whether to enter a trade, zoom out and check the larger trend before making a decision. 2. Follow the trend, don't fight it. Have you ever heard the saying, the trend is your friend? That applies perfectly to digital options. When a market is trending up, focus on call options, buying. When a market is trending down, focus on put options, selling. Trying to predict reversals is much riskier, especially for beginners. Instead, look for strong, established trends before placing trades. A simple way to confirm trends is using moving averages. A short-term moving average, 10 period, crossing above a long-term moving average, 50 period, signals an uptrend. If the short-term moving average crosses below, it signals a downtrend. 3. Use risk management, never bet the farm. Digital options can be highly rewarding, but they can also drain your account fast if you're not careful. The key to long-term success is risk management. Follow the 1 to 2% rule. Never risk more than 1 to 2% of your trading capital on a single trade. If your account has $1,000, don't risk more than $10 to $20 per trade. This prevents you from losing too much too quickly and allows you to stay in the game even after a few losses. Common mistakes beginners must avoid. Now that you know the basics of successful trading, let's talk about the biggest mistakes that cause traders to lose money and how to avoid them. 1. Overtrading, the fastest way to lose money. Many beginners place trade after trade, thinking that more trades equal more profits. But in reality, quality matters more than quantity. Overtrading leads to increased exposure to market noise, higher risk of emotional trading, burnout and frustration. Instead, focus on taking only the best setups, even if it means fewer trades. 2. Trading without a plan. Imagine a pilot flying without a flight plan. Sounds crazy, right? Yet many traders do this every day. They enter trades randomly, without a structured plan. A solid trading plan includes entry and exit rules, risk management strategy, a checklist before entering a trade. Stick to your plan, and don't let emotions dictate your trades. 3. Ignoring market trends. Some traders believe they can outsmart the market by trading against the trend. While this can sometimes work for experienced traders, beginners should always trade with the trend. If the market is moving up, stick with call options. If the market is moving down, focus on put options. It's simple, but it works. 4. Emotional trading. Fear, greed are your worst enemies. Trading is psychological. Many beginners panic and close trades too early when price moves against them. Chase losses by increasing trade size after a losing streak. Get greedy and over-leverage when they win a few trades. To succeed, treat trading like a business, not a casino. Stay calm, logical, and disciplined. 5. Not using a demo account. Many traders jump straight into real trading without practicing first. This is like trying to drive a car without ever taking lessons. A demo account allows you to test your strategies risk-free, get comfortable with market movements, avoid unnecessary losses while learning. Crystalballmarkets.com offers a demo account where you can practice digital options trading without using real money. Final trading tips for long-term success. To wrap up, here are some additional tips to help you trade smarter and avoid costly mistakes. Stay informed, follow economic news and major financial events. Diversify your trades, don't put all your trades on one asset. Set realistic expectations, trading isn't a get-rich-quick scheme. Use trading tools, leverage signals, price action analysis, and indicators. And most importantly, stay patient. Trading success comes from consistency, discipline, and learning from mistakes. Conclusion: digital options trading offers exciting opportunities, but beginners must approach it with the right mindset. By following trends, using higher time frames, managing risk, and avoiding common mistakes, you can increase your chances of long-term success. If you're ready to start trading with a trusted platform, check out crystalballmarkets.com, where you can open a demo account and practice risk-free before trading live. That's all for today's episode. If you found this helpful, subscribe, share, and leave a review. Let me know what topics you'd like us to cover next. Until next time, trade smart, stay disciplined, and never stop learning.